I wanted to go over 5 important things you need to know to set up a tax-deferred pension plan for your self-employed business. This is also known as a cash balance plan. Contributions to a defined benefit plan, unlike 401k and profit-sharing plans, vary from person to person. They're typically based on the compensation history and age of the individual. A final calculation needs to be performed by an actuary. First thing you need to do is to calculate how much you can actually contribute to a defined benefit plan. The actuary can figure that out for you, and there are calculators online that give you an idea of the amount. Second, you need to collaborate with your CPA to ensure that you have a sufficient cash flow to contribute to the defined benefit plan. The actuary will need to draft the plan document for you after the amount has been decided between you and your CPA. The actuary must agree and the CPA must agree on the amount of the contribution in order to go ahead with the next steps. A plan document which will list all assumptions of the pension plan. Every defined benefit plan must be compliant with IRS rules and regulations before you can set up the investment accounts. This document has to be drawn up by the actuary. Since it's a new legal entity, a new tax ID number needs to be registered. A plan document that's pre-approved by the IRS also should be provided so the actuary can file it. Reach out to a financial advisor next to set up your investment account after the plan document has been drafted. Make sure he or she knows that it's a tax qualified account. Now you can start making contributions to the plan. Whatever was decided between you and the actuary has to be the contribution for the first year. The actuary will calculate a range for each subsequent year along with a recommended contribution amount. In order to avoid overfunding or underfunding the plan, you're required to contribute within that range. You can deposit funds until the date you file the tax returns for your business. All qualified plans are required to file annual returns with the IRS. Note that these returns are different from the company tax returns and your personal tax returns as well. Also note that the CPA or financial advisor cannot file these returns since these are required to be certified by an actuary. If you are self-employed and interested in exploring the idea of a defined benefit plan for yourself, feel free to give us a call. We have specialists in this area and can provide you with valuable advice and services that could end up saving thousands of dollars in taxes and get a boost for your retirement.